as well. Relative hawkishness from the Bank of England. We've had 4 of the 9 voting members, a 9-0 vote, which is a bit of a surprise in itself. But 4 of the 5 voters wanted a bigger rate hike. So instead of the 25 basis points, which the market had priced in and everybody was expecting, we've got 4 of them wanting a half a basis point rise, so 50 basis points. So more hawkishness to come. So consequently, sterling has. Let me just bring up. Let me just get rid of me for a minute. Sterling consequently has had a right old rally. So let's 2 main ones here. Let's zoom this up a bit. Cable here rallied through 136, 136.30 at one point. We're back to 135.75 now. Big hike, hawkish expectation, and the euro pound went under the key 83 again. It's back to 83.20 now, but certainly big moves for sterling on that, more hawkishness than was expected from the Bank of England earlier on today. So let me just check everything's connected and we're all good to go. So YouTube, I think that's. Yeah, we're on YouTube, and it looks like Facebook's coming as well. So good afternoon to everyone. So as I say, lots of news today. Earlier this morning we've had, let me just put me back up, we had PMI, services PMIs from Europe and UK. France, Germany, all in line. The UK was better than expected. Services came in at 54.1, and the overall euro number was 51.1. So government claims UK is doing better than the rest of Europe. Certainly those services PMIs have come in better than expected in the UK. So sterling remains bid on that as well. I would say we've cooled quite significantly during Mr. Bailey's press conference. Also today we've had the statement from the ECB as well. And that's in line with expectations again. No rate hikes. I mean, markets are pricing sort of rate hikes for the end of the year, possibly from the ECB. But the tone remains this argument a bit like from the RBA that inflation is only transitory. But remember, yesterday we had a record CPI reading, or HCIP as they call it in Europe, reading yesterday at 5.1% for the eurozone area. But we remain fairly, or Mr. Lagarde remains fairly comfortable that they're going to be in charge of it. Andrew Bailey's been talking about more tightening to come, and he's been questioned about being behind the rate curve. He's arguing that they're not. I mean, central banks very rarely admit they're actually behind the curve, but many would argue. Probably the Bank of England are probably in line. It's maybe more the Fed that maybe is a bit more behind the curve. But obviously there's some significant negotiations in the MPC in the UK about, for the Bank of England, about this added rate hike. So 4 dissents. Normally it's about 2, typically. 2 of the 9, 2 of the 7 have been pretty hawkish for a while. But more action quicker is what many of them were arguing for, given this spike in inflation, and not just a spike, but the fact that it seems to be hanging around more, and it's broader than expected, and it's certainly going to hang around longer than many of the central banks were hoping for. Certainly this time last year. So if we look at our main crosses, if we go to the deal flow, I say sterling's very much in focus. Euro also in focus. This is the we just had a look at cable. See, the guppy as well went through 156 to 156.50 at one point. So bid again on the pound against the yen there. So sterling's a relatively well bid. If we hold on this, oops, what am I doing? There we go. If we look at the cable here, if we zoom in a bit. Sorry, I was going to do the daily, wasn't I? The cable, it's had a strong week from this big move down into the end of January. So we're now into our 5th day of rallies from that 136.36. I'm just saying we lost my face. It should still be here, hopefully. I down here? I'll be lost me altogether. Can you still hear me, everybody? Hope you can. So look, there's no comments in here, so that's a bit disconcerting. But let me have a check the Facebook feed. Is it still up and working? Let's have a look. It looks all right. No, that's on. That looks okay too. Okay, it looks okay. Right. Where was I? Yeah, cable on this daily time frame. So it's very sort of weakened as the dollar improved into the end of January, and now we've bounced. Well, into the end of January, we bounced. We've had a strong start for February so far for cable. So 136.45 is that big thick line I've got here on this hourly chart. So we'll see where we go. Miss Lagarde is just about to start her press conference as well. Andrew Freudian slip. Andrew Bailey is still talking as well, obviously. Let's say Miss Lagarde, usually very good in the with the press. Andrew Bailey less so, but they're both playing with a very much a straight bat, as we say in England or the UK, and so cable's holding that bid. There are lots of news swirling about for the UK economy today. The rate cap, which comes into effect on the 1st of April, it's the energy price rate cap. Obviously, we've had this big ramp in wholesale energy prices across the world, particularly in Europe, particularly the wholesale gas price. So the UK price cap has gone up 54%. That means for the average household, like 20 million households in the UK, price is moving up by something like £700, £800 a year. So a massive increase for people's energy budgets. On top of that, we got a right hike in national insurance premiums from the 1st of April as well. Again, the Prime Minister and the Chancellor confirmed that will go ahead. So a big squeeze on households in the UK. Although earnings are moving up, there are more people in employment, but those that are employed, wages are getting squeezed all over the place as well. So with this ramping inflation, and then the Bank of England also said in its statement today they're expecting by April UK inflation to CPI inflation, this is the measure there, to hit 7.25%. So the outlook across the developed economies is, this squeeze on inflation. Therefore, we get a stronger reaction from the central banks. Currencies improving, and that's putting pressure on riskier assets like the stock markets, which have had a fantastic run over the last 12, 13 years. That's still likely to continue. Overall, generally biased to the upside, but the issue remains it could be quite a sticky 2022. Earnings so far this quarter for particularly US earnings have been rather weak or mixed. No, weak's a bit of an unfair comment. Some blockbuster numbers, but some big headline and popular companies like JP Morgan kicked off with a weak number. Netflix, obviously Google had a good number yesterday. Their shares moved up, a huge move for PayPal yesterday. Tesla's been very, very volatile, as you might expect, but it's really pressure on another big name yesterday was Facebook. Facebook for the first time had less active users for the first time ever. Outlook looks quite weak. I think it was UBS. I was at Morgan Stanley. I can't remember. One of the big banks have downgraded their outlook on Facebook this morning. So yeah, lots going on, and obviously that creates volatility, creates obviously opportunities. So good morning, Dominic. Anything you want to have a look at in particular? Let me know. We'll have a look at it. Euro dollar will rise again, even though the ECB maintain interest rates. Well, Mass, not necessarily. We've got the euro really under pressure. If you look at the daily time frame, the dollar is very much on the bid during January. This is the daily time frame, so excuse me. This is the euro on the daily time frame, so it's a bit like the cable rate. Euro fell quite significantly into the end of January, went down to this 111.35 area, then a double whammy. We recovered as the dollar's weakened a tad, but 113. is where we remain capped, and we're back down at that at 112.87 today. So it's not really. If we look at the 5-minute chart, see, this is the announcement. It's the 5-minute chart. Remember, this is when the announcement came out. So fairly hefty. We compare that to the sterling one when the announcement came out. We've got the 5-minute chart for sterling. We go back to 2 o'clock here. Much more volatility on the hawkish Bank of England than we've seen in the euro area on an unchanged outlook, to be honest. So markets were really looking for a bit of a hawkish tilt from the euro and Miss Lagarde. That hasn't happened. This is the 1 hour time. That hasn't happened. We still got, even today, we're still sort of edging lower, rejecting that 113 level at the moment. So we'll see what she's got to say during her press conference. Perhaps I should have listened to a press conference then gone live on here, but never mind. such is the best laid plans of mice and men, I suppose. So Leona asking for something completely different. Leona's asking about the Kiwi. Kiwi's been recovered quite well along with the Aussie this week. This is the 1 hour chart for the Kiwi, Leona. So from these lows at the end of January, this is last day of January. Yeah, there we are. Last day of January, we were down here at .6530. So we recovered basically this week back over 66 to 66.45. We can't break 66.50. Let's put that on there. We're sort of testing it here. This is 66.50 here. So we tested it on Tuesday. We tested it again yesterday, Wednesday. We come back down through 66.25, and we're up today. So at the moment, we're bid a bit on a bit of a weaker dollar today. Sorry, the Kiwi's firmer against the dollar. It's not necessarily a weaker dollar, it's just a mixed bag really for the dollar. But if we look at the daily time frames, it's similar to the other charts we looked at against the dollar, Leona, where we've had a stronger dollar into the end of January. We found a level at 65.30, as I said earlier, into the end of the month, and now we're just moving up, trying to test this 66.50. So on the higher time frames, this daily time frame, see the 20-day moving average sits up here at 66.90 or 66.88. So .6680 is where that would need to break to turn this downtrend for me into an uptrend. Okay, so we're still we've moved down quite nicely, trended down quite nicely. Perhaps close your short. In fact, maybe closing it today, depending on how you're trading this one, but that might be taking you out at the end of the month to bag you some of your pips. And then, so this is a retrace of the downtrend. So it may need to, well, it does need, for me, it needs to break 66.90 for it to move back up. If not, the trend to the downside continues. And if we can see, this is the daily time frame. So this is all the way back to the end of October, beginning of November, where we're up here at 71.80. Couldn't quite get to .72, the Kiwi. Since then, we've weakened. So down, consolidated in December, down leg again for January. Remember, the virus was very much contained in New Zealand. Came back with some lockdowns. So we've had some mixed pictures from the Bank of from the Central Bank of the RBA in the New Zealand government. Let me just find my Facebook. I can't see my Facebook questions here, if there are any indeed. That's a lot. It's going to take a while to load. Speaking to her, that's not good at all for 22. Don, I'm not sure what you mean, Don. What's not good for 2022? Our 2022 outlook. We'll see. It's not good for certainly the data out of the UK hasn't been great. Anyway, Leona, we were talking about Kiwi, weren't we? So Kiwi's down. So today we need to move over there. And sorry, in the higher time frame, the daily time frame, relatively bid over this .66 level, and we're holding 66.25 as well today from the dip to test it yesterday. So it's pretty strong. A break of 66.50 if we're going to move up to the upside for the Kiwi. You can see the stochastics is still moving up. Thank you, Andrea. RSI still bid, but we've got to look at this flatness of the MACD here. Can you see that above my head? Yes, you can see that. And the MACD here is just flattened out today. Not a lot going on. So we've had this big move up, ramp down, and it's flattening. It's round about, not a lot of action going on today, but we're holding 66.25. To the upside, Latifat is asking about gold. What direction will gold go in the next 30 minutes? Let's have a look. Gold in the 30-minute chart. So hourly chart holding 1800. So that's the big line, but we've tested it now. We've tested it today. We tested it a few times today. So the hourly time frame is down, Latifa. It went under its 20-hour moving average this morning here. That's that purple line there. You can see that. That was at 9 o'clock this morning. And then a couple of hours later, at lunchtime, we've breached the 50-hour. This blue line is the 50-hour moving average as well. So it's been biased lower all day, and we're still going down. So we've gone down. Obviously, the area to test was clearly the round psychological number at 1800. We've done that in this current hour and bounced off it. So if we go to the sorry, let me go up. So the 4-hour is sort of gently moving down, isn't it? Under a big move candle up earlier yesterday. Then we've moved down since then. So the 4 hours down. Clearly, you can see that your 4-hour trader would have it's not moving a great deal, but it's that's your 4-hour trend line down. The 1-hour time frame, that's the 4-hour trend line. Blue my point. You see the 1 hour will be a wee bit closer, so a bit tighter to the price action. And we go down to where's it going to go in the next 30 minutes? Well, that's still biased to the downside, Latifa, isn't it? You can see because the moving averages here, the pink line, the 21, the 9, and the 5, these hourly or these 30-minute moving averages they are now, are all nicely angled to the downside. So that continues to move down. Obviously, it's found a bit of a test. It doesn't look like it wants to go certainly under 1800, but here on the 30-minute chart, we haven't been below at the end of any candle. 118.96 or 1801 has been really the support for 30-minute, but it's still weak. Okay, so that's still biased lower. MACD is still, as you can see here, the signal line is still drifting lower. The histograms are beyond the signal line. RSI is tapped up a bit here. Actually, it's moved off. What's that? 30. Yes, it moved down. That's starting to move up a bit. Yeah, it's still biased lower. But again, if you're trading the 30-minute time frame, you've just you're 9 minutes into the current one, which is bounced off there. So it's still biased lower. But would that take a short at this position? Probably it's been moved up. Looks like we might have had some support there, but it's too early to take a long position. Again, here you'd want a break of this 20 moving average, really, if you're using this direction there. So negative, but it may be looking to get some support. It certainly has had some support at 1800 and 1801, and we're currently trading at 1803, testing 1804 at the moment on gold. So where did I get to? A lot of you come in now. So yeah, average range for the dollar on the daily time frame. This is this blue line down here, the ATR. The ATR is about 11 pips in an hour, 12 pips an hour. On the daily time frame, Leona, the average move on a daily basis over the last 14 days has been about 57 pips for the Kiwi. That's fairly typical, 56 pips for Kiwi. Okay. Dominic saying, oh yes, can you look at the euro pound? Yeah, euro pound. So look where we are. I'll keep up with everybody's comments coming in here. Euro pound, Dominic, obviously being weakened by the bearish Bank of England and Miss Lagarde trying to pick it up. So I've got the 83 level on here. If we got to the daily time, it's in a big downtrend and much longer than the other downtrends we're looking at. So from rejecting 86 in November, and again 86 was rejected in December, we've really been down. And here on this daily time frame, it's big downtrend through the end of December into 83.25. It didn't look like it was going anywhere. Tried to rally, went to 84 towards the end of January, and hang on a minute, but yeah, daily at the end of January here. And then we've been down ever since again. We had a bit of a spike up last week into the end of January, but we're still down. And long term, if we look at this, if we look at the weekly, we can see, that's been moving down all of 2021. Basically, this is the beginning of January 2021. We were up here at 1992. So it's been a bit of an agonising move down, and it's not the most exciting. But this is a weekly on Euro Pound, and it's biased to the downside, all to do with obviously the Brexit deal getting signed and anticipation that the sterling had been undervalued, blah blah blah, all that sort of good stuff. So basically, the trend remains to the downside. This is the weekly, remember, Dominic. So your weekly's in a downtrend. The daily is very much in a downtrend, having broken out of this channel. But 83 is a key support area, and we're currently trading 83.35 today, having both central banks with their news. And you'd argue that it looks like the outlook over the next few months, and certainly into the year end, is that the Bank of England will be perhaps more bearish and more hawkish than the ECB. And excuse me. And therefore, this is probably still trending lower. So 83 becomes the key support area, but that is moving down. But it doesn't, it's not the most exciting one to trade, to be honest. Still very close partners business-wise, but obviously a lot of problems now with the red tape that's come in because of the Brexit deal. But anyway, 83.35, bias lower, and today bias lower, and but that's gone low enough basically from intraday traders by looks of things. But that was a spike low, and we're moving up here as Miss Lagarde speaks. I'm not sure what she might be saying something that's. Her opening statement: inflation to remain elevated for longer than expected. So once again, Mr. Lagarde's coming into this hawkish tilt, which is what we sort of were perhaps expecting today. But that's a very positive claim. Bit of data I missed 15 minutes ago when we started was the one we normally look at on a Thursday. The initial jobs claims is back at the 238,000 versus 245,000. So it's lifted back up, but it's still, typically for the US weekly claims, it's still a typical economic cycle low, really, or average around 240,000. So it went well under 200,000, remember, and now we're back up to the 240,000 again. So initial claims better than expected, but in the 238,000 compared to 245,000, but not as good as it's been over many weeks. Running into the last few weeks when it's gone back up. But obviously focus at the moment is very much on the ECB and Mr. Lagarde's speech and the Bank of England earlier on today. We've got ISM PMIs and services PMIs out of the US as well, two bits of key data. The ISM services PMIs and factory orders coming out at 5 o'clock server time. That's 1500 hours GMT. So some key US data still to come today. So Dominic, Euro Pound edging to the downside. Shankar, good afternoon. We looked at Latif's gold. Mart, I must have missed your comments. So what's happening on gold? Sally, as I said, we've bounced off 1800 here. This is the 30-minute chart on gold. That's the 4-hour trend line, that blue line on there. So we're still biased to the downside, but we seem to have bounced, or we have bounced, I should say, off 1800 as the key support area, and our low so far today is here at around 1801, so it's sort of edging up, but still biased to the downside on an intraday basis. That Salis Quay is the same. Bright side. Everybody loves trading. What is it about gold, guys? What is it about gold? Gold comes up all the time. There's lots of other things that move around, and gold's a great one to trade, but there's lots of other things to trade as well. But as I say, if we look at the end of day basis, it's a bit choppy. It's not a really, we were up here for January. We got to 1850. So on the higher time frame, guys, I don't know if you trade this end of day, 1850 is a key target level if you're looking to go long. 1830 is the second resistance. The first resistance now is at 1815. So 1815, 1830, and 1850 are the three targets to the upside. 1800 itself is major support. Below that is this 1788 or 1790 if you want to round it up. And then the big support is here at 1770, which we held here back through all of December 1770. So they're the big support and resistance levels for the gold market, and it's trading in between those at the moment. At the moment, we've had 3 days up. We're down today at the moment, but 1800 continues to be where we're getting drawn back to today. Okay, bright side, and everybody else is asking about gold. What is the current state of my PAM account, Shankar? I don't know, friend. Contact your account manager. Contact support at hotforex.com. Or come onto the website, Shankar, and a little pop-up message should come up, and the support guys will get in touch with you and explain things. I don't know what your state of your PAM account is at all, my friend. I'm a beginner. How to operate, says Ramat. Ramat, I say this to all beginners. Principally, this trading business, treat it like a business. Firstly, make sure you invest enough money that if you lose it all, it's not going to change your lifestyle. Think about losing. Think about managing your losses. All about risk management in this business. Too many people come into this trading business thinking, for some reason people think it's easy, and anybody can do it. Daily course, or you watch a free video, and that's it. I can do this. It's like with anything in life. You've got to practice it, get some experience, find a mentor, read books, watch videos by all means, get on some courses by all means, but do it. That's the principal thing. And as a beginner, you've got to manage yourself. So you've got to understand yourself first and foremost. So can you cope with losing trades? Do you know what leverage is? Do you know what margin means? What's the spread? Do you know what spread means? What's lot size mean? What does volume mean? Understand all the basics first before you get going. Keep it, as risk-free as low a risk issue as possible, but be aware that markets can move very, very quickly. Okay, lots of stuff on our website, our videos, our education courses, our ebooks. Please make the most of it. Jan, can you do the 5? You got this. You got this. I got this. I don't know. You're talking to one another. Okay. Good afternoon or good evening to you, my friends. Hope you're well. And Happy New Year to all my Asian and Chinese friends. Put sterling after the huge news. Yeah, it was huge news. Intraday, big fuss here on the 5-minute chart as the news came out. We rallied to 136.26, so through 136, big round number. It didn't last for very long, did it? 5, 10, 15, 20, about half an hour we were over 136. We came down very quickly into this moving average here on the 5-minute charts. The 5-minute charts, little pin bar there, nice little tweezer bottom, nice rally down, down trade over, long trade here. And the last 5 minutes, that's just been wiped out altogether as well. So if we got to the hour time frame, it's a bit more excessive. Big positive, then we came back and closed the hour higher than we'd opened the hour, and now we're below where we'd opened the hour. So it's big anticipation of the reaction to the hawkishness. Particularly, I think it was the 2 key things. One, about inflation moving to 7.25% as quickly as April. It's only a few months away now. And more importantly, the 4 members of the MPC that wanted a 50 basis point rate hike as opposed to the 25 basis point rate hike, which is all priced in, to be honest. So the big shock to the upside was there's more perhaps hawkishness to come. And perhaps Andrew Bailey in his press conference, I haven't actually seen his press conference, to be honest, may have cooled the markets a wee bit. So the rally in sterling has come back down. But remember also, we've had some quite okay US data as well in the meantime. We've had the UK PMIs this morning were better than the German and the French ones. And US PMIs still to come, services PMIs. And the claims, the weekly claims have appeared in this hour as well. So that's pulled that back down a wee bit. So there we go. If you're talking about, as Emmanuel is here on what's going to happen on the 1-hour chart, Meduzi, it's really got clear support here at 135.46. It's the 1-hour chart. Yeah, 135.46 are clear support here. And it's still, so now we're back biased to the upside because of this big breakout. So 136, big round psychological number. Not as significant as 135 in the higher time frames because it's a round number and it's got 5 in it as well. And long term, 135 is a key level, but it's certainly big to the upside. So it's got the daily, you can see that we've had 1, 2, 3, 4 days up, and we're sort of, anticipation of the Bank of England. Really, that's the run up from the sell off we had in January. and we've moved to the upside. Okay, so cable sort of biased high is still on the higher time frame. The 4-hour is still bid. It hasn't broken under this 9-period EMA. So again, 4-hour trade will still be long. This pair is to the upside. So 136 becomes the real target for 4-hour traders as well. Daily, that's a 4 or 5 days to the upside. Intraday support here at 135.45. Major resistance at 136 itself, but obviously that's come closer because yesterday's high took us to 135.83. And YouTube, so I'm keeping messaged by somebody that knows that I'm here, so it's annoying. Excuse me. Okay, so Emmanuel, it's biased to the upside. The news is out. Next big move for this pair is obviously the ISM's out of the United States. Gold is also between 38 and 50 fib levels. Indeed. Again, I don't know what time frames you're talking about, but yes, this I guess you're talking about the down level here. It's a bit messy this, if I have to put the fib on it now, but let me just find a different profile for commodity for the gold chart here. If we look at, I think it's on here, isn't it? Gold daily, yeah. So if we zoom this up, you can see what Osama's saying here. Let me just put the fib level on. So that was our rally up. That looks like the bottom's in, and we're currently, as Osama's saying, stuck here at 1800s. The key thing, Osama, to my friend. But yes, we are in these 38 fib, 50 and 38 fib levels for gold also. So wait for some sort of direction. Dominic, we've had a look at pound euro. Emmanuel, we've had a look at sterling. Unless you want to look at a lower time frame, please let me know. So we just look at elbow, cuff, elbow. Okay, somebody's having some good fun. How to become the next Stuart, says Osama. Just keep practicing, my friend. Just keep. There's nothing special about me, my friend. Just have a system, trade your system. The biggest thing I learned early on, Osama, is really to accept losing. That's what most people can't do. They come into this business, think they're going to win all the time, they're going to make money all the time. It's relatively easy, but have a system, trade your system, test it, back test it. There's lots of great free back testing sites. Obviously the more you pay, the better the testing might be. But it's trading something, both the asset, whatever you're trading, or the strategy, whether it's stocks or commodities or forex, that fits you and your lifestyle. So lots of people, as I said, we did the scalping webinar this week, and lots of people get attracted to scalping because it's quick. People think it's quick, therefore it's easy. That's not necessarily the same, but there's no overnight risk because all your positions are closed. You haven't got many pips to try and get to, so it's using up less margin. So there's some quite significant benefits to scalping. But the short termness of it, whether you're using an automated system or you're trading it manually yourself, that intensifies all the soft stuff that make good traders. So things like risk management and emotional control, fear and greed, hope, regret, all those sort of things get compressed and exaggerated and concentrated in a shorter time frame. So scalping makes that actually more difficult. So find something that fits for you, my friend. That's all that is. Okay, and there's no right and wrong answers either. It's like economists, analysts are the same. We have rules to how to apply these things, whether it's these Fibonacci levels. Some people put them on wrong. Some people have different ways of using it. Indicators. People, they have different settings for their MACD or their RSI or their ATR, whatever it is they're using. Find something that works for you and just practice it and keep it going. Okay. So will we weaker or stronger further than the Bank of England? Well, overall, Ali, but sterling, as I just said, certainly against the euro, for instance. I've got a different chart here. That's why I'm sterling against default. Sterling against the euro should, you argue that trend is being set for age, so the trend would continue to the downside here on the daily basis here. So it's been moving down, but we went under that key 83 level this week, but you can see it's biased. It's having a good day at the moment. Obviously, Mr. Lagarde's talking a bit more tough than perhaps the market was expecting with regard to inflation and outlook. And obviously Mr. Lagarde's again, market started talking about possibility of rate hikes for the end of the year for the ECB, and obviously she's been pushed on that, and I guess she's not ruled them out, which is one of the key things that's going on. So in the market. So sterling, you'd argue, is biased, but remember now it's all about the Fed's next action as well. Now, again, the Bank of England, like the Fed, talked about quantitative easing over, and now we're moving into a period of quantitative tightening. So instead of pumping money in to the economy, they're going to start sucking it out, and that's really what's happening with the UK as well, with regard to the workers getting squeezed as energy costs go up, as national insurance contributions are going up in April as well. So a much tighter squeeze on households in the UK, and that will reflect into retail sales. It might reflect into the housing market, and obviously might reflect into businesses trying to come out of the 2 years of the pandemic that we've had. So that's just everything we have to deal with as we're going forward. Nasdaq, says Peter. Hi, Peter. Hope you're well, my friend. The Nasdaq. Let's look at the Nasdaq USA 100 here. Remember, let's just go back to my daily time frame. Remember, we had this huge sell-off this is a daily chart. Huge sell-off in January. 10% plus. We recovered for the last few days of January, so it wasn't too bad in the end. This golden line here is the key 200-day moving average. It's sitting around the 15,000 level, and we breached it earlier in the week. We come back down again yesterday. Actually, that can't be right. That's not yesterday, because we were up yesterday. Nasdaq was up yesterday, wasn't it? That's the second. No, it was down yesterday. Sorry, it's the S&P that was up. And this is USA. Yes, it's down. The futures are down again this morning, quite significantly. We're off 2.5% this morning. So we've rallied to 15,000, and we've ran into the 200-day and the 20-day moving average as well. So there's a big, thick resistance there, 15,100, where we closed on the first trading day of the month of February. Sold off yesterday, back through the 200-day. I'm seeing this up for you. That's the brown, and now so the 20-day and the 200. That's not great either. 200 and the 20 at the same level. So there's a big, thick wall here of resistance, of technical resistance, Peter, to get through, which has rejected its first attempt at it. Okay, so we've moved back down. MACD remains relatively negative because we're moving down. Okay, so weak. The earnings numbers from the tech companies, haven't been great. We've had this downgrade for Facebook. Netflix got sold off, then it got, became a bargain, got bought by some big fund manager. It's rallied, moved up. Amazon reports tonight. Google's obviously had a bit of a blowout from its Alphabet's had a bit of a blowout from the Google side of things. So mixed numbers as far as the big tech co's are concerned. Microsoft doing quite well, and Amazon tonight, as I say. So from an earnings point of view, so technically we're still weak, okay, because that 20-day moving average couldn't get breached. It broke over it for one day, and then we were down yesterday. We're down today again at the moment. The MACD signal line is still moving lower. There's no sort of divergence or anything. That's trended lower. It's flattened out. It's still negative. What I've got on here, I've got stochastics rising here to a sort of an overbought area, ironically. Here, what's that? 10-6 month. So that's caught that move up, but we've ran into this big resistance at the 220 and the psychological 15,000 and 15,100. So a big thick wall there. We've bounced off. Obviously, you know, the low we went to earlier in January took us all the way down here to 13,700, so under 14,000, and we currently trade at 14,700, so 100 dollars above that. So the end of day support, that was intraday, took us down to about here around the key, or the key, I should say, 14,000 level. So that's the major support, Peter, going forward for the Nasdaq. Watching from Jamaica. Is that Prince watching from Jamaica? Yes. So Peter, where was I? I can't put your question up because you're on Facebook. Sorry. So where do we go from here? Well, that's sort of a bit of a rally on the daily, but we've got this major resistance here. So intraday, there we go. It's a bit more. You can see it a bit more definite there on the 4 hour. There's the 15,000 level. We did peak up there. We got to 15,250, but then rolled over. So again, the 4 hour trader that's trading this, not necessarily the investor, he's got, you know, a bit of a flaw here. There's that 14,000 level. 1, 2, 3, 4 times it was tested here. That went long here, and he's rallied up, and he got out yesterday as we went through 15,000, came back through 15,000, and then that for 4 hour traders using this strategy would have gone short here yesterday or this morning, and it's not moving down much, but it's broken under that 21 EMA. The 5 and 9 crossed earlier, and then we closed under that this morning. So we've been down, not a great move down, but we're down. Immediate support comes in with this 50 EMA at 4, again, big round number. So we've got 14,500 of support and then 14,000 itself. So some big, again, psychological numbers on the Nasdaq, but obviously the big players have a big significant impact on this index, and Amazon is one of the big ones that report tonight. So if they, you know, disappoint, like some of them have, it could weigh on the S&P, the USA 100 and the Nasdaq, perhaps more so. They're the key levels you want to be watching going forward. That's a 4 hour intraday. The 1 hour market is already weak. Big down candle was last night into close, and then we've moved sideways on the futures market and then a leg down at the moment. MACD signal line went under this morning. RSI's moved down. We're in the 30 area, and stochastics moved down into this oversold area. So it's weak on the daily as well, on the 1 hour as well, having rallied up quite nicely. Everyone's asking about Ethereum. Well, fan, the crypto is very much huge down trends. If I can share, can I share? Let's find my what I'm looking for, my technical guns. Fine. I don't know if you'll be able to see this, guys, but this is our sort of daily sort of tracking of 44 key assets or 42 key assets. Ethereum is one of the 3 cryptos we're following here, but you can hopefully you can see this. You can see here, you know, Bitcoin 57 days. What does that mean? Well, it's the number of days under the 20-day moving average, or the midline of the Bollinger Band, if you're using that as an indicator. So the crypto's in big downtrends. Ripple 27 days below its 20-day moving average, and Ethereum 44 days below its moving average. Comments from yesterday was bearish engulfing, price tested 2,800, breaking down to 2,700, closed just over 2.6. The 200-day or the 200 moving average is at 28,000. So 28,008 is our notes for the. Andrew's saying zoom in. You couldn't see it. Where's it gone? I've lost it now. This one. So how do I zoom in? Zoom it. There we are. There we are. Yes, I should have done that. Sorry. There you can see what you're talking about, my friend. So 44 days under its 20-day moving average, and we'll have a look at that. That's what we're saying. So let's have a look at the chart for Ethereum. Have I got chart? So what was it? It's Ethereum. You're asking what you. So here we are. let's zoom in. It's the daily. Sorry, it's not. It's the weekly. So again, you can see this is the this purple. This is the 21 EMA. So if we track this back, you can see what our chart is saying there. So we've been under this purple line since the beginning of December here, where we were sort of consolidating. Looked like we'd come down and we'd consolidated, holding on to just over 4,000, and then that 3-day break to the downside. Really strong move down, and then we've been weak ever since, haven't we? So those 3 candles there moving down consistently under 4,000, testing 4.7, and we continue to move. So that 21-day there sits at 2,900 now. 2,900 to 21 EMA. Our note there said 28,800. So different. That's a 20 simple moving average. This is the 21 EMA, so a little bit out of it, but again, you know, it's still weak and moving down. Again, MACD, the signal line broke here. The middle of December hasn't, and just continued to track lower. RSI tracking lower, looking a bit of life though, RSI today. So we found a bit of support potentially at 2,350. Seems to be a bit of as low as we want to go so far. So for one, hope you can see that. So Ethereum here, 1, 2, 3, 4, 5 days support at 2,346. So call it 2,350 fan, and then we moved up, but we haven't moved up enough to break the 20 EMA. So again, using this strategy, the 5 and the 9 came. The 5 came up to the 9, but you see it hasn't crossed. So the blue line is still below the yellow. The yellow is still below the purple, and so we're still trending lower. You see how the angle is still down, so that's flattening out certainly. So we went down, then we flattened out. But you see there was see how the moving averages stayed parallel to one another. The 5 and the 9 had stayed parallel. We're way away from the 21 here. Then we had another leg down here on the 21st of January. Then that was the 22nd. Was that or the 24th? That Monday, the Friday we were down. Monday we tested down to this 2,350 or below that level, and that's where the support is at the moment. So we bounced a wee bit off that, but you see the bounce hasn't taken us above where we were before. So it hasn't taken us back to this mid-January level, which was the 3,000 level. So we haven't got anywhere near that. And then we've rolled over yesterday and a bit today as well. So, you know, that's your support, 3, 4, 5, 6. We're trading at 2,609. And our resistance sits there at 2,915 or 2,800 on our 20-day. So it's biased to the downside, Eartham still. Obviously, the cryptos can move very violently, but that's a nice old trend. As a trend-following type trader and investor as I am, that's a nice downtrend that's been running for a few months now, and no reason to get out of that, I would say, to the downside, not necessarily to get in, but certainly there's no sign of that moving up and that trend breaking. First signs perhaps of some support, because you know, it's a long support, that, isn't it? You know, 1, 2, 3, 4, 5 days and bounced off it. But we had a similar action here, didn't we? We 1, 2 bounced off it, came back to it, and then broke back through it. So this time, who knows? But they're the key levels you want to be looking for going forward, my friend. Prince, good morning to you, my friend. Good morning, Jamaica. Hope you're well. Hope the weather's better than it is here. I hear a thunderstorm going on outside my window here. So take care, my friend. Anything you want to talk about, Prince? Anything you want to have a look at? We'll have a look at any more questions on Facebook. Let me just go back to Facebook. Andrew would have sent them to me. It doesn't look like so. So 20 minutes to US Open. Lots of data today. Let me just recap. We had services PMIs this morning from France, Germany. The overall Eurozone came in at 51.1 for services for the Eurozone, a little bit less than expected. The UK services PMI was significantly better than expected, actually, at 54.1. That's coming in. No, there's no more questions there on Facebook. That was better than expected. No problem, my friend. 54.1. So that was a better piece of economic data. But obviously, in the UK, there's still the whole political scenario of Prime Minister Johnson hanging on for his political life Another 3 of his own MPs suggested a vote of no confidence they will put in him yesterday. So they need 54 of them to do it privately or publicly. I think there's 8 or 9 now publicly have said no confidence in the Prime Minister, but now waiting for a police investigation rather than civil service investigation. So anyway, he seems to be writing that out somehow. Went to see a delayed call with Putin. I'm not sure how well that went down, delaying Mr. Putin for Mr. Johnson. But anyway, as far as the sterling is concerned, let me just go back. It's relatively, we said earlier, relatively well bid on the actions of the Bank of England, principally. That's my actually, let's go back to these pound crosses. So this is the pound against its other major crosses. So this is against the Aussie, CAD, Swiss. You can see it's sort of relatively biased, but it's come off quite aggressively, hasn't it? Here against the Aussie, last 3 hours it went up and it's come back down. Similar here, the Swissy. Yen, we went to over 156 and we're back down again now. I don't think you can see all that, guys. Sorry, let's switch through. So here, big move up over 192, in fact 190.50 here against Aussie. Against the CAD, it was a big move up to 170 over 1.73. We're back to 172.15. So still biased to the upside, but the events of the more hawkish Bank of England's been thrown off immediately, but that'll be absorbed, I would guess. And still looking relatively hawkish, Bank of England. 125. What's that? 125.20. We went through for the first time for since the end of January here on the 1 hour time frame for the Swissy. So yen went through 156, and the dollar, as we saw earlier, cable went through 136 to high as 136.25 up here. So sort of flattening out here on this 1 hour time frame, still bid to the upside. Jason, we just cable, the guppy cable against the yen. This baby here, again, you know, that's just tracking higher since the end of January. If you've got the daily, you can see what a volatile pair this can be. Quite rightly, it's known as the widow maker, the guppy, the pound yen. But here, January went down under 153, and we're now into what? 8th or 9th consecutive day higher, isn't it? It's 1, 2, 5, 6, 7, 8, yeah, 9th day higher, but principally on anticipation of the action of the Bank of England raising rates by 25 basis points. But I say the big news today was 4 of the 9 voters on the Monetary Policy Committee of the Bank of England were looking for a half a basis point, a 50% rise, 50 basis points, I should say, not half a basis point, to the upside. So that's got some more legs. 157 here for Jason for the guppy from earlier January is our high, but again that's bid, and again you would have gone long here into the end at the beginning of the month. It's 3 of the 6 days higher has certainly happened here, where it's broken over the 20-day moving average here. So long here from 155, and we went to 156, 50, so 150 pips to the good already on an end of day basis for the guppy trade. I don't know what time frame you're trading that, Jason. Do let me know if you want a bit more intraday information. You said the weekly. Let's go back to the weekly. You can see that turned around from a move down in January, a strong move up here thus far. But we've been, you know, as low as under 150, weren't we, at the end of December, and that's been up, and there's that 157 coming into play again. It takes us back to October, end of the year, and that's our next target to the upside in the weekly time frame. Okay, Jason, let's just finish this conversation because they're all coming in here. Do you think the momentum will lost for a while despite monetary policy hike? Remember, markets are always looking forward. This was a bit of a shock today, but we've also had, you know, that inflation number going out at 7% is quite a big number. That's sort of been priced in, but for the Bank of England to say 7.25% for CPI for inflation, you know, that's the average. So we could spike even higher than that. But they're saying it will top out. They're trying to say it's going to top out on the April number. So here we are in February. So it's only 2 months away. But April is also the month when the national insurance contributions, hit every worker in the UK. It's a significant rise, 1.5%. We got the energy. Obviously, we're coming out of winter, but we're still. It says still we're just at the beginning of February, so there's still certainly a few months of that. So again, from the 1st of April, that energy price hike, 54% Ofgem allowed the cap to go up. That's a huge £700-800 a year increase for most energy consumers in the UK, and obviously lots of people that are struggling at the moment, going to be struggling even more. Heating or eating, the poorest people in the community getting hit the hardest again. So, it's obviously the bank's independent from politics. Since Gordon Brown let them go, but obviously they can't, upset the mood of the UK too much. But they act on economic policy. But it's the first time, remember, I can't remember how many years, something like 2002, 2003, since we've had consecutive rate hikes from the Bank of England. So this is a pretty hawkish Bank of England. And remember the comings and goings on the MPC have also tilted to the hawkish side anyway. But certainly we're into quantitative tightening from quantitative easing, and we're certainly into our rate hike cycles. And remember, Bank of Canada were first to move, then Bank of England, and it looks like the central bank, the FOMC, the Fed, will be moving in March as well. So we'll see. So Jason, you're saying 1 hour on the guppy. Let's just go back to the guppy for you. So that's the weekly. So our weekly's up. Daily, we said bid, and we're into our 7th, 8th day. So that's tight. So the higher time frames to the upside. 1 hour broke out this morning. It's a nice little breakout, isn't it, from yesterday's high. Here would have triggered on this particular approach, would have gone long. Here, in fact, it's sort of crossed earlier. Yeah, so definitely, it's 9 o'clock this morning. We went long at 155.36 here. Well, a bit lower than that, isn't it? That whenever that can. Anyway, you get my point. That's long, and it's still long basically on the 1 hour. So the people who vote for 50% hike, but Mr. Bailey only by 25%, so I'm holding on the break for a while. Yeah, remember the higher up you go in these institutions, obviously the more centrist you become. So Bailey, Bailey, and a bit like all the other Lagarde and Mr. Powell, tend to have to hold the central line because they're the ones that face the press, they're the ones that run the press conferences, and they've got to balance both sides. So it's easier for the chief economist, or Mr. Pill, I think, is a particular hawk, isn't he, to talk up. But it was a bit of a surprise, some of those people that did turn hawkish as well. So you could argue that behind the rate curve, he's been asked that in the press conference. They're denying that, but they always deny that anyway. So we'll see. But certainly Sterling's bid here on the guppy, it's bid. Remember, the guppy can move around very quickly, so it can turn around very, very quickly. So be careful with that one, Jason, as well, my friends. So Danielle, hello. I guess you're in France, are you? With that, or perhaps you just love France. I don't know. Where was I? If France asked about oil, so that's all. Anyway, so sterling very much in place. And as I say, Bailey and all the leaders of these banks tend to hold the middle ground a bit. Jason, you're absolutely right. Crude oil, WTI, again, yesterday, remember, we had two major bits of news, or significant bits of news. We had the weekly inventories, which showed a drop, a build of 1 million. Was it 1 million yesterday? Numbers sort around. Yeah, it was 1 million drawdown from an expectation of a build of 1.8 million. So that pulled the price down after we'd had this the high. Let me find the gold. Sorry. Go back to the commodities one. After we'd had a big rally in the, you said US oil, didn't you? Ephraim, US oil it was, wasn't it? You were asking what did we try? Aji's asking about NFP. Certainly, I'll come to that in a minute. NFP after ADP. Yeah, big news week. It's all swirling around. Ephraim, this morning, UBS talked about Brent, not WTI, but Brent getting to $100. It's somewhat inevitable, given that Brent has gone to $91. So it's just a matter of time before one of them, the major banks, not that they're the first, but they've talked it up a lot. The average at the beginning of the month or the end of December for 2022, a lot of the banks were talking about an average for 2022 of around $85 a barrel. So it was still to the upside from where we were. So, but as you can see here, this is US oil on the daily time frame, and it continues to be bid. Basically, again, trend following traders, again using this strategy, would have gone long here. Nice little breakout from a move down for November, a bit of sideways action in December. We've been long since the 22nd of December, trend following traders, and really haven't looked back, and no reason to get out. Just drag your stop loss up. You might have got out there, but again, using this strategy on an end of day basis, we haven't closed under the middle moving average we're using here, the 9-period EMA, so we're still long. We did get to $88 yesterday on that confirmation of the 400,000 barrels a day. I'm sure you know all this, fam, from OPEC, but there's some big noises within OPEC and OPEC Plus, particularly from the Russians, about trying to increase production because they see the demand coming forward. But because of the COVID crisis, a lot of maintenance, and this is what's caused some of the spikes in the wholesale gas price this winter. A lot of the ongoing maintenance hadn't been done and hasn't been done. So we've had 2 years of reduced maintenance on some of these aging pipelines and lack of pipelines and all the rest of it. And so that's constricting production as well. So some of these places are at maximum production. But again, the Iranians yesterday said they're happy to pump more oil. Obviously, that's all to do with the sanctions story. They're obviously jumping in on the situation in Ukraine and Russia, trying to get the good guys. But basically, Ifram, it's bid, and there's no reason to close any long position there if on an end of day basis as an oil trader. Coming down the time frames, obviously a bit more action going. Well, let's go up first. Let's go up to the weekly. You can see very, very strong week from the same week we talked about there at the end of December. So we've had 1, 2, 3, 4, 5, 6 consecutive weeks to the upside. We're at these 7-year highs here. As you can see, this is the weekly chart, and we're off the top of the chart here. If we go to the monthly, you can see where we are. So if we look to the left, right off, we have to zoom in to bring in our 7-year high, and it's off the chart, isn't it? I'm going back to 2017 here, and it's not there. Let's move that forward. Let's go weekly and to the daily. So the higher time frames remain bid, and as I say, UBS this morning talking about $100 a barrel for Brent, and usually there's $2 or $3, $3, $5 difference sometimes between Brent and WTI, but bid basically. So if we go down the time frames, 4-hour, nice rally up yesterday on the news. Profit taking into close. Hang on a minute. Where am I there? September. Why is that? So going mad. So moved up yesterday to this 88.70, $89 here on the spot, and just drifting down. But again, not much of a trend there on the 4-hour, and the 1-hour continues to move. Oh, dear me, what's going on with this chart? Has moved down today. So let me show you this. Yes, 3rd of February. That's where we are, isn't it? So that's our spike yesterday up here, this 88.70, and big move down on the inventories. And then we drifted lower since then, but that still looks relatively, as I say, big here on the daily to the upside. Intraday, yeah, it's actually weak today, isn't it? Can't get over it. It's 20-hour moving average. I haven't got excited about moving forward, but maybe running out of steam. So today, if you're trading this intraday, we've had a low here at 85.88. Last 4 hours are up, but still short. It's moved down yesterday, retraced down, so it's still biased to the downside. We need to break $87 again or actually a bit lower. I'm exaggerating a wee bit. Around about 86.75. So 86.75 was it's our next high, which is where we are in this hour. And then earlier today we went to 87.16. So 87, yeah, it does need to break really. This is going to move up. This might reject this and move back down to this 85.88. So biased lower today. But 4 hour, yeah, so that's that 4 hour support as well, 85.80, 85.80, 85.83 times. So we've already tested that again, so it may start to move up, but 86.75 and then 87 and then 87.15 to the upside intraday, Nifram, my friend. Okay. Ali, anything to say about NFP tomorrow? Any idea after ADP declined harder? Yeah, yesterday, huge miss for private payrolls, but this has sort of been not telegraphed, but let's go back to the beginning of the week. We had a press conference from the White House. It was a bit naughty when Trump did it. It was all everybody was up in arms, but the press conference outlining quite clearly that the week that the Bureau of Labor Statistics take their survey for the NFP number that comes out tomorrow was the 11th of January, and that week there was 8.8 million people not working because of COVID restrictions and also because of the severe weather. So there could be a negative number tomorrow, just like we had a negative number for ADP. It used to be, Ali, that ADP and NFP were quite coordinated. That isn't the case anymore because they do their maths differently, where they count the jobs. However, the current expectations from the big central banks and the big analysts is a low of a decline of 250,000 to a build of 385,000. So it's quite a narrow range, but the fact it's negative, looking for declines for January, is quite significant as well. So it's all adding political pressure on Mr. Biden as well. So President Biden, his ratings are very low. It is obviously election year. He needs to do something. Midterms, looks like the Republicans will win the House and possibly win the Senate back as well. Win the Senate and possibly win the House back. So it could be quite a tough year. He obviously needs to get that better bill through. He needs to get the senator in Pennsylvania on side. Apparently they're speaking away from the press, away from prying eyes to try and push this through. But that's a big political issue in America. And obviously jobs is very, very hot topic in America. So yeah, as I say, the Reuters and the Bloomberg consensus number remains around 150,000 to 155,000. Obviously, that was taken before the ADP number, but some banks were, looking at this negative number anyway. Barclays was the last one I looked at yesterday, and they were looking for about a 50,000 jobs increase for January in the United States. So yeah, NFP tomorrow. Andrew will be here this time tomorrow for that number as well. So lots going on. Jason, nice explanation. Thank you very much. It's not a problem. That's what I'm here for. I have seen England hike their rate and the yen still push the market down massively. Well, as you say, Jason, that's markets do what markets do. Again, guys, don't just because things happen, you expect, the sterling should go up because they've pushed up interest rates and they've had a more hawkish outlook. That should support sterling. Sometimes markets do what markets do. Well, always markets do what markets do, regardless of what the economic data say. But remember, interest rates are the most fundamental bits of economic data. So where's my default? So yeah, just because you're expecting to, you're absolutely right. Just so that's why I always say trade with a stop loss, trade with a take profit. You never get all of a trend. You never get you can get stopped out too early, but have a system, trade your system, and accept you're losing trades. Most people don't, and that's the big problem that lots of people have. They don't accept they're losing trades. So where's my gone? There we are. So you're absolutely right, Jason, my friend. Ifram, no problem. That's what I'm here for. Daniel, don't apologise, my friend. Never apologise. Sorry, may I know what your expectations for pound dollar in NFP this Friday? Well, obviously, NFP number will affect one part of that trade. Sterling has had its main news for the week, really. That's some bit tomorrow. But remember, when you're trading any pair, it's a balance, isn't it? So we've had some good news as far as sterling is. We've had this hawkish Bank of England. We've had some good service PMIs from England, so that's good. On the negative side for the UK, I keep saying England, I meant UK. For the British pound, is obviously the political turmoil that's swirling around in London. That could suddenly change at any point. Doesn't seem to be affecting sterling so far, but so at the moment, the daily is up. It was big day today. You can't really tell that's Bank of England day because we've been up for 1, 2, 3, 4, 5 days, and it looks like we may be finishing up. So 136 is the line in the sand for this pair. Tomorrow will be just another candle. Will we break up here? Will we be down here? Who knows? But certainly it can move 100 pips quite easily. It's cable, Danielle. So 135 is a key line in the sand, and it's where when we're just above that is the 20-day moving average, which sits there at 135.20. So there'd be two lines I'd have on my chart as support zones, which we could test if there's a good NFP number tomorrow. But as I said, it may be negative. People might be getting, and that's what the White House did. They had this press conference, perhaps preparing the market for that. So it may not be the big shock if it is a negative number or a big negative number. If it's a positive number, that will be taken perhaps even more positively tomorrow. Anything over 100,000 will be seen as a very good number, I would argue. Anyway, I say some banks are looking at 385,000, but the way the coronavirus has gone in the US, and not necessarily hospitalization, but stopping people from going to work, stopping people from taking their kids to school, impacts economically. So that could be it's not going to be a big number. It could be a negative number, I say, as well tomorrow. So that's what we're expecting. So regards to the news, the daily is up, Danielle. The 4-hour remains bid. We're over the 20. The support there on the 4 is 135. 135.25. Again, testing 136 in this current candle. And the daily is up, so the 4-hour is up. 1 hour is a bit less direct, although it's biased back to the upside now. There's the huge announcement when the statement came out, and so again that's biased to the upside as well. So 1 hour's up, 4 hours up, daily's up. So the trend to be broken is the uptrend, Danielle, my friend. So obviously watch that for the numbers. Obviously, I'm saying obviously. I went to 1 hour, didn't it? Obviously, you're not trading this on these higher time frames. You're trading this in these shorter time frames. There's been some huge moves on the announcement. So if we go down to say the 15-minute time frame, huge announcement, but then it gave it all up, didn't it? It's coming back now. But certainly, look at that a big candle on the announcement, the statement coming out. But then next hour we just declined, didn't we? So 4 consecutive candles lower. There's our support today breaking out to the upside. But again, now we've bounced off that level. So that high is above that high, which is above this high. So we've gone higher this afternoon. Here you can see. So 35.70 from 135.63. From 135.45, the 200 moving average is there on this 15-minute chart. We're above the 20, so yeah, that's biased up. And obviously 136 coming into play again at the moment. We got some US data shortly as well, and let me have a look at how the US markets have opened. Again, it's the Nasdaq leading the way, as we saw earlier. US markets owned 5 minutes ago. And Nasdaq is down 2.4%, Dow and S&P also lower 1.4% for the major S&P, and the Dow is down 0.5% as well. But it's the Nasdaq on the back of that downgrade for Facebook yesterday. Well, they missed after hours, so obviously their shares actually. I wonder what they're currently trading. I haven't got Facebook here. Let's just so we'll look at go at some stocks in a minute. But we see the Nasdaq. We looked at Nasdaq earlier, didn't we? It's been moving down quite significantly today and opened down 2.4 percent. What have I done there? Oh, it's because I've got. That's why I was talking about cable, wasn't I? So yeah, cable now back over. I was looking for. That's what I was looking for this. The US data. US data is out in. Yeah, so I'll keep going. Well, let's keep going to the. We've got services PMIs, and then we got ISM services PMIs. The ISM number, the Institute of Service Managers, is the most significant number, and that comes out at 5 o'clock in the top of the hour. But the services PMIs, which is more comparable to the data we've just had out of Europe and the UK, that's out in about 10 minutes. So 50.9 is expected for the services number, and the more important ISM services number is expected to dip down back under 60 at 59.5, but 62 was a big number last month. But remember, we were as high as 70 in was that December? I can't remember when that was. Was that? When did we get to? Yeah, December, wasn't it? We spiked really high. So yeah, we come back quite aggressive the service sector in the US. So 62 last month, 50 back under 60 when the data comes out is what the market is expecting for ISM service PMIs. That's that last big US piece of data today. Jason is saying you're right, absolutely. Markets do what they do, absolutely. They do what they do, my friend. Captain Jerome. Jerome's asking, good day. What's your take on the dollar ahead of NFP? I'm just joining. Captain, hello. Well, it's not really the dollar. It's been cable today. Sterling's been the big one, but dollar. We go back to the. Let's go back to mine. Crosses. You can see here so far the dollar index, which is when you ask about the dollar, this is one that most people have a look at. Remember, the euro's a big weighting. We've been let's just start here. We've been very strong into the end of January, so we had a strong dollar from under 95 to over 97. That's a significant move for the dollar index. We topped here at 97.42 just before the end of January. But since then, you can see it's a strong retrace as well, a strong reversal for the dollar index itself. So we're into our fourth consecutive day down, and some big candles in this down move. So that the move started earlier in the week, and here our third day of February, Thursday. So Monday, it's been a weak for dollar index, and we're back under 96 significantly today now, and we're down at 95.51. The low, as you can see here on the daily time frame, dollar index is currently at a, what's that? We're not yet here. This is a 9-day low. So from a nice rally up, a rejection of 97, step too far. Looked like 96 may hold. Yesterday wasn't the case. We closed under 96 and we're down significant leg again today. So this is more to do with a bid on the euro and a bid on sterling. Remember how the dollar index is made up. So this is more to do with stronger euro, stronger pound. So you see cable is up on the daily basis. You can see it's on the 4-hour basis as well. And the euro is also up here. This is Miss Lagarde effect, testing 114 today. So that's a stronger, particularly pounds, stronger ECB. So a more hawkish ECB than the market was expecting. Certainly a more hawkish Bank of England than the market was expecting. So both those currencies are being bid, and therefore it's pressured on the dollar. So dollar's down, and again a trend that's moving. Yesterday's close on an end of day basis, the dollar index itself went short here at 95, whatever that closing price was, and we're down today. So end of day traders got short there at 95.95, and we're down at 94.47. So we're already 50 pips to the good, to the downside for the dollar index. When you say about the dollar, Captain, I don't know what particular other currency pairs you're talking about, but for instance, against the CAD here, It's rallied to 127 earlier today, but again, so pick your pair. Dollar's weaker down here, 126.58. The Aussie we looked at earlier, spiking and holding 71, and we're at 71.67. So again, pushing to new highs for the week. The Aussie 72 is just up here. Haven't been back to 72 for a while for the Aussie. Kiwi is doing quite well earlier as well. This is the Kiwi on the daily basis, so again another one 3 days higher for the Kiwi. So yeah, dollar's certainly a bit weaker here at the beginning of February, Captain. And NFP tomorrow, you know, as I say, anticipation of possible negative number tomorrow due to the weather, due to the coronavirus spikes and clusters in the US. So we'll see where we go. Daniel, no problem, my friend. That's what we're here for, okay? You ask the question, I do my best to try and formulate an answer. If I don't know, I'll tell you. But there's no right answers, you know. It's just interpretation. All technical analysts do is interpret the charts and the candle patterns and the lines on the chart, basically. So, you know, always when trading, always manage your risk, my friend. I'm running out of steam, guys. Where are we? A few more minutes. We'll see what that US final bits of US debt. Well, it's not the final bit, but the ISM number, not the ISM. Yeah, sorry, I can't keep going to 5 o'clock if you don't mind. I'm a bit tired now, so let me just close that. So quarter two, a couple of minutes, we've got the services PMIs, then we got factory orders, say, at the top of the hour. If there's no more questions, I will call it a day. Gary, no problem, my friend. So that's what I'm here for. I don't think there's any more on Facebook. Doesn't look like it. Just refresh that. Andrew's not sent me anything, so I'm guessing not. Nothing. Okay. So, right, let's see how that numbers. Let's go back to the currency of the day, really, which is cable here. So it's bid again, 136.15. We're continuing to move to the upside this last 15 minutes. Yeah, so it's a good day for sterling, thanks to the Bank of England, but also euros having a pretty good day as well. Big spike. That's a huge move for the euro in the last hour, 100 pip move. So Miss Lagarde has been very hawkish as far as the market's concerned. That's a huge breakout and blowout to the upside. I'll have to look at what the news is saying, but certainly stocks weaker at the opening of the US session. Dollar weaker, euro bid, and sterling the currency of the day so far. Let's have a look what the currency strength indicators telling us on our website. Let's bring in our currency strength indicator. So our traders board is our currency strength indicator. Let's open, see what sort of moves we've had in the last hour. So there we go. Euro's up over 1% against the yen. So strong euro, weaker yen. Kiwi better. We just had a look. And sterling actually quite mixed, isn't it? I don't know that. So it's the weaker yen. So euro certainly the one that's caught the market. So the markets are very much pricing in a hawkish Bank of England. The hawkishness from Miss Lagarde and the ECB has obviously caught the market a bit of unawares, and so we've got a strong euro. So, and certainly that's certainly, I've got the cable would have been move of the day, but certainly it's the euro. Huge 100+ pip move for the euro from sub 113. Here we were down as low as we got as low as 112.65. So not quite 112.50, but certainly low of the last 2 days was tested before the ECB, and we've had 2 huge 1 hour candles out testing that 114 level. And if we look at the daily chart for the euro dollar, it were again another one that's off this floor at this 111.50. So into our again our 5th consecutive day higher and the strongest day thus far at the moment, testing 114. Our January high took us to 114.80 zone there. So certainly bid another 80 pips to test that January high for the euro. Let's just see if that data's come through. It should be out by now. Final services PMIs better than expected. Not significantly, but 0.3 of a pip, a point, I should say, a tick. Sorry, so it's coming at 51.2, was expected to remain the same as last month at 50.9. So it's 3 ticks higher. The more important ISM services PMIs out in 15 minutes, 59.5 is expected from 62. From a big blowout or strong number last month. See what that happens. Mr. Lagarde talking about here. I'm just seeing here. We won't hike rates until net bond purchases have stabilised, and we've stopped it, which is we've stopped buying the bonds, which is basically what Bank of England have done today, and it started their tightening circle. ECB talking about not wanting to rush into decisions. That's that European broader view. Jason, finally, my chart is showing great bull strength, but my RSI is overbought, so I'm watching that double top about to form. We'll see how the pound handles that level. You're talking about the pound on the, I guess you're talking about the pound on the guppy. Let's have a look with you as we finish. It was the guppy, wasn't it, we were talking about? Where's it gone? Where's my pound? Where's the guppy gone? There it is. Your RSI, yeah, RSI here on 14 has gone to 77.71 on this 1 hour time frame. Yeah, it's into overbought. You know, it went up there and came back down. So yeah, can be quite volatile, but certainly it's bid. I assume or I hope you've dragged your stop loss up, but we're certainly moving higher. And here, with only 12 minutes to go for this 1 hour chart, we're at the high of the day from a candlestick point of view, Jason. That still remains bid, even though RSI is punched over the into the overbought area. Histogram's got a bit extended there. That it's a bit above the signal line on the MACD, but yeah. I just throw my stop loss up. Mine would be probably at the top of this gap now. On this one, I'd have it there probably quite nice and tight, around 155.85. But again, I can't tell you what to do. But yeah, you clearly know what you're doing, my friend. So very best of luck. Thanks for your time, everyone. I hope to see you. Well, I won't be here tomorrow. Andrew will be here tomorrow. So trade carefully, stay safe, and we'll see you all again next time. So take care. Let me leave you with the euro. I thought sterling was going to be the chart of the day, but it's certainly not. It's euro. 100 odd pip move here on euro dollar to close out what we're going on. Oh, he's on a 15-minute time frame now, is he? All right. 15 minutes, probably even more overbought, my friend. I thought you said an hour, but yeah. 15 minutes still up. 15 minute, yeah, all right, yeah, it's gone up, it's gone down, but yeah, if that's yeah, you would have got up, taken out, and then gone long again here half an hour ago. It's back down. I'd have his stop loss. Well, there's my hour stop loss at 155.85. Might have a bit tighter for your 15-minute, perhaps there at 21.55.88 or something. You know what you're doing, my friend, I'm sure. Okay, Tisan. No, thank you. Take care, Ifran. Stay safe, everybody. I say we'll see you all again tomorrow. Andrew will be here tomorrow from the office, not from my my office at home. So take care and see you all next time. All the best, everyone.